Commercial banks have risk analysts who determine if someone should get a loan or not, and it should have been expected that savings and credit organizations, or SACCOS, should. But as it turns out, at times, just knowing those controlling the funds or being their friend will get you a loan, even when you may not be able to pay.
Down at our SACCOS, we have not been taking up risk management. What are the risks when we are giving out this money?
Members who are at the same time clients, a lot of them do not want to pay back the monies that they have borrowed, so there's a lot of default. But also among the management, the board and members of management, we have quite a number of cases of fraud.
With that comes the accruing repercussions that plague many SACCOS,
leading to poor repayment of loans by the borrowers, and hence tying up the capital that the entity would be able to use, and in the process bringing the business to a halt.
That is why the Microfinance Support Center is training heads and board members of SACCOS on risk management and savings to stem the hemorrhage.
There are times when we find difficult, when some people they fail to pay. How do you handle such an issue, especially with SACCOS? Okay, so I think we need government to come up with at least a law with this small SACCOS. If some people fail really to pay, how do we handle him legally? Because we find that somebody, if you take them to court, you don't get really what we should have got.
Apparently, SACCO-specific guidelines are not out of order, because while they make up the lower end of the financial sector, the principles that apply to, for example, banks may not necessarily and wholly apply to SACCOS. In effect, they require more attention to be effective in doing their intended job. Samuel Setumba, NTV Business.